Forex trading is seemingly the quickest path to get rich in Africa today. Africa has lately seen a surge in forex trading being pushed as a very effective way to make a ton of money with small amounts of capital and efforts. From influencers,
today I want us guys to talk about Forex.
Brokerage firms,
multi-asset broker, Xness has officially launched in Kenya.
Everyone is trying to convince everyone to do forex trading. This unfamiliar means of making money has caught the attention of many, and due to its complex nature, it has led to some people putting money into it without them understanding it, and so most lose their money. It has left even more people confused trying to understand how they too can hop into this money-making wagon and not get left out. So today I'll help explain what forex trading is, what's up with everyone advocating for it, and whether you should consider trying forex trading. Join me as we uncover the truth about forex trading in Africa. Forex trading or foreign exchange trading is basically a system for converting one currency to another to enable international trade. In the 1800s and 1900s, many countries used the gold standard, which fixed a country's currency to a specific amount of gold. So when you wanted to buy something from another country, you would convert your country's currency to gold, travel to the country, convert the gold to their currency, and make your purchase. But after World War II, Bretton Woods, which is the World Bank and the International Monetary Fund, established a new international monetary system. The currencies of most countries were now pegged to the US dollar, which was in turn backed by gold. Well, what does this mean? Countries agreed that their money would be worth a certain amount of US dollars and kept it that way. If their currency's supply increases or decreases, they would step in and buy or sell their currency for the dollar to make sure the exchange rate remains the same. Countries around the world started saving a lot of their money in US dollars because it was widely accepted, stable, and reliable for international trade. Now, because the US had promised to keep the dollar at a fixed value compared to gold, it had to make sure that the dollar didn't become too expensive or too cheap. If the dollar's value started going up, the US would step in and buy more dollars using its gold reserves to keep the price down, until finally the US could not keep using its gold to support the dollar's value, and this system collapsed and the floating exchange rates were established. Unlike the Bretton Woods system with its fixed exchange rates, floating exchange rates fluctuate based on market forces of supply and demand for a particular currency. The value of a currency becomes stronger, which is typically the currency getting more demand, if the country is economically doing well, has attractive interest rates, or is speculated to have an economic boom. Conversely, if there is political instability or negative reports on inflation, people want to get rid of the country's currency as it is speculated to lose value. And so there is more supply of a currency than demand, and so its value weakens. Now, who keeps track of these and adjusts the rates? It's not just one person or a supercomputer. It's actually the result of countless transactions and decisions made by traders, businesses, governments, and banks all around the world. They all buy and sell currencies on the foreign exchange market, Forex, and the prices they agree on become set as the exchange rates. This brings me to the main point. How do people make profits from this? Forex trading as a profit-making venture is simply just buying a currency at a lower price and selling it at a higher price to pocket the difference as profit. Forex traders are essentially making educated guesses about the future direction of currencies. The majority of participants in the forex market, including banks and businesses, engage primarily to facilitate international trade and manage currency risk, which is aiming to avoid holding devalued currencies, and not forex trading. Forex trading, better referred to as speculative forex trading, is less common among these big entities, However, there remain significant players in this aspect as well, controlling 95% of all speculative forex trading in the forex market. Individual forex traders only deal with 5% of the volume. This for me is a very important thing to note, because if speculative forex trading was that lucrative as we often see advertised, couldn't we see more individual traders, considering it has been around for over 60 years? I mean, in the stock trading world, 30% is individual investors, and in crypto, it is at 80%. But anyway, let's see how these 5% make their money in speculative forex trading. Forex trading is done in currency pairs. A currency pair represents the exchange rate between two currencies, like US dollar versus euro. The US dollar here is the base currency and the euro is the quote currency. So if you see something like USD/euro 0.94, it means that 1 US dollar equals 0.94 euros. There are two major ways a forex trader can make money. One is through what is called a long position, and the other is through short position. In long position, you believe the base currency will become stronger relative to the quote currency, and so you take a long position in that currency pair. You are basically buying the base currency in the pair with the expectation of selling it later for more. In short position, you believe a currency will weaken relative to another, so you take a short position in that currency pair. You are essentially borrowing the base currency to sell it immediately, hoping to buy it back later at a lower price, returning it and pocketing the profit. Of course, there are many other terms they'll use, but this is primarily how they make profits. As you begin in forex trading, you are a wanderer in the dark, to say the least. Predicting currency trends with only basic economic data and news is, without exaggeration, equal to choosing red or black in a casino roulette. For the banks and financial institutions that do make profits off speculative forex trading, who due to its risky nature put only a small chunk of their money, they still use very expensive data, years of experience, insured risks to carry out their forex trades. But still, sometimes the unpredictability of the markets gets to them. The short-term and even long-term currency movements that make up forex trading are highly unpredictable, even for the professional traders. But this is something those who sell to the public the idea of forex trading as a business venture know and understand. And they have in turn crafted more guaranteed strategies to make money through forex trading than trading itself. One of these ways is through selling educational services, guidebooks, and trading bots. All these are products which in theory are supposed to help you get to professional trading levels quicker than you would naturally with the available material. And while there are genuine educators and professionals who sell the real actual value, the field of forex trading, especially the one in Africa, is the one filled with many bad players. These bad players use false advertising, substandard products, and some outrightly scam you, never delivering what they were offering to you. And these bad players have made the already rare profit venture an even less attractive venture. They use predatory marketing, where they target vulnerable or financially disadvantaged individuals with misleading or false advertising, often promising unrealistic wealth or success through the purchase of their forex trading educational products or services. And since speculative forex trading seems complex to most people, with all the numbers and graphs, most of these preyed-on individuals are convinced that the returns advertised are quite actually possible with quote-unquote trading or bot help. And this is not my thinking, it is a fact that the forex trading experts have admitted themselves. Despite the risky and unpredictable nature of speculative forex trading, it is in fact possible to profit from it. The most important thing though is learning. The free available information on the internet is more than enough when you consistently learn. Learn about identifying trends and historical data. Do not be tempted with the quick use of exploitative experts or bots. When someone sells you immediate or quick returns, they are 9 out of 10 times lying to you. The second is to always manage your risks, covering every possible hole you can lose your money through. And there are countless ways trading softwares have made this possible. This combination of risk management and consistent learning is the least riskiest way and best way for someone, typically a beginner, to profit from speculative forex trading. I will now try my best to give an objective opinion on speculative forex trading as an income source for young Africans, because it's what these influencers and brokerage apps sell to us, right? Okay. So, as a young African looking to make money today, is it a wise decision to try speculative forex trading? To judge it as a wise decision, we have to look at the average input versus the average output. And if the output matches or exceeds the input, then it's a good venture. So, what do you input into speculative forex trading that will get you your desired output? Number 1, financial knowledge. Forex trading involves complex financial instruments and strategies. This often requires significant dedicated learning and ongoing research. Number 2, trading skills. Beyond theoretical knowledge, developing practical trading skills takes time and experience. This includes honing your ability to analyze charts, identify trading opportunities, and execute trades effectively while managing risk. Number 3, discipline and emotional control. The fast-paced and volatile nature of Forex demands discipline and emotional control. Time commitment. Successful Forex trading is not a passive activity. It requires dedicated time for research, analysis, monitoring market movements, and making informed trades. And number 5, financial capital. Having a solid capital base is a must for it to act as a buffer against inevitable losses as you gain experience and skills. Now the output. The main output, obviously, is financial gains. Speculative forex trading offers the potential for high returns due to leverage. However, these gains are not guaranteed even with all your input. Financial gains depend heavily on market conditions, something out of your control. It is crystal clear that, objectively speaking, this is not a fair balance of input and output. Output should not depend that heavily on conditions outside my control. No? But of course, this is an objective view. There are subjective factors that can tip this scale to your favor. For example, some individuals have a natural learning ability for financial markets and technical analysis, allowing them to grasp concepts and develop trading skills more quickly. Other individuals have high tolerance for risk and strong discipline and are better suited for forex trading. Also, those willing to put in the long hours of learning, practicing, and refining their strategies may have a higher chance of achieving profitability. Also, having access to quality educational resources, mentorship from experienced traders, and access to financial capital enhances your learning and potentially improves your outcome. In conclusion, I can't be the judge for whether speculative forex trading is a good investment for you, but what I can advise you is this. To the few who have these subjective factors to their advantage, go ahead. Speculative forex trading was made for you. But to the many young people in Africa, speculative forex trading is relatively, compared to other means of getting money, a bad choice. You have a greater chance of making good money by learning and monetizing other many skills or investing in so many other things than by participating in speculative forex trading. Thank you for watching this mini documentary on the truth about forex trading in Africa. In the comment section below, tell me your thoughts on this and your opinion on what I have talked about in this video. As always, it was a pleasure writing and producing this documentary. If you enjoyed the video, feel free to leave a donation through our M-Pesa till and join the community of video sponsors. Support us also through subscribing, and I'll catch you in the next one. Cheers.